Yo, what's going on, everybody? This is Marcus and I'm here with my lovely wife,
Shira.
And today we're going to be talking about the most popular finance options for your home or rental property. Stick with us. Did you know most of your favorite entertainers, gurus, and entrepreneurs have life coaches? Well, we combine our financial knowledge, UC Davis coaching certification, and experience paying off 6 figures worth of debt to assist couples in taking their finances to the next level. To schedule a coaching call, email us at BlackMarriedDebtFree@gmail.com or direct message us on any of our social media platforms. So yeah, in this video, we're just going to give you a brief overview of the most popular home finance options, and we're going to get a little more in depth on the strategy that we used to purchase our 2 rentals. So the number one and often the most popular way to finance a home is by using a FHA loan. An FHA loan is a mortgage issued by an FHA approved lender. FHA stands for Federal Housing Administration. This loan is designed for lower to moderate income earners, and these loans require a lower down payment, usually at around 3.5% of the total home price. So we use an FHA loan to purchase our primary residence, our first home.
So it's pretty simple to do. So we purchased our home during the financial crisis. During this time, a lot of the owners that were losing their homes were kind of destroying them, and were really upset. So when we came to look at the home that we're now in, it did not meet FHA standards. And so that's something to know, that FHA is not just going to finance any home. It needs to be livable. The prior resident that lived here took the toilet, took the sink, and just took all kind of stuff. And the property at the time was bank owned. And so in order for us to qualify to be able to purchase this home, the bank made some repairs to the home. And I don't know if a lot of banks do that anymore, but at that particular time, banks were really desperate. And so they were able to make some updates. So that's one thing to think about with FHA loan, is that you're not going and getting a fixer-upper necessarily, because there are certain standards that go along with the home being financeable through the FHA process.
Yeah, Sharon, another requirement of an FHA loan is that it is a primary residence, not an investment property. You have to live in this property. So keep that in mind.
So the next one is a VA loan. So this loan is for veterans and for those that are serving in the armed forces. A unique thing to this loan is that you can actually get a home with 0 down. So I don't know if that is fiscally responsible, but I know that a lot of veterans have been able to leverage this type of financing to acquire not just one home, but multiple properties. And so for a lot of folks, this has been a really great option. And so though it might not apply to everyone, it is an option if you are in the military.
The third option to acquiring financing for a home is through conventional loan. Now that is what we used to finance our second property. Now with a conventional loan, you're usually going to be asked to put down at least minimum of 20% on the property to qualify for a conventional loan. So that is what we did on our second property. We found a house that was going for about 104, and we were able to put 20% down and finance the rest of that mortgage. And the cool thing about a conventional loan is it's usually fixed in its terms and its interest rate. So, that's one thing we definitely want to highlight, even going back to an FHA loan, is if you can avoid an adjustable rate mortgage and get something that is locked in, we recommend you definitely do that.
Absolutely. And a benefit to having a conventional loan is that when you're putting down 20% on a property, it eliminates the need to have private mortgage insurance or PMI. And so if you have an FHA loan and you put down 3.5%, you have to pay for your loan to be insured. So it's an added cost to your mortgage. But if you have a conventional loan, you don't have that extra PMI cost or insurance. If it's for your primary residence or for a rental and you don't have that PMI, like that is ideal, and it's going to save you thousands of dollars.
Yes, that's true, Shire. And kind of the obvious thing when you're putting 20% down is you've already got 20% equity into that property once you purchase it. So that's another cool thing. The next financing option is a home equity line of credit, or what's also known as a HELOC. Now, this strategy is what we used to purchase our first rental property. What it is you have equity that is built into a property that you own, and you tap into that equity. But it's not like a home refinance when you just get a check for a fixed amount. What you do is you have an amount that you can tap into and pay back, pretty much just like it sounds. You have a home equity line of credit that you can access and pay back multiple times.
And just for a little bit more detail, usually your home equity line of credit is for a period of time. And so like our home equity line of credit is for 20 years. And then you also, depending on who you go with, you have the option to get a fixed rate or an adjustable rate. And so we chose to have that rate fixed because we wanted to know what our monthly payments were going to be year after year. And so really this whole idea of using our primary residence as a bank to purchase an additional residence came while we were paying off debt. Using a home equity line of credit is certainly an option, but we would encourage you to do your research and to put a lot of thought into how you are going to use it and how you're going to pay it off. You want to be sure that you're using the money for investment purposes and not just going on a vacation or, going shopping and using the money, for frivolous things. So for us, it was strictly business, and we kind of had a whole theory behind it that we hope to dive into a little deeper.
Sharon, I think one thing to remember is, let's say for instance you have a home that you own outright that's worth $100,000. You will only be able to take out a home equity line of credit for roughly 70 to 80% of that house. So that's one thing to consider as well.
And another thing to consider, I guess this could be its own video, right, is the interest rate, because you want to make sure that it's going to be worth it. And if you're using a home equity line of credit, you want to make sure that it's reasonable, that it fits your needs, and that it makes sense numbers wise. So you want to make sure that the numbers are looking the way that you want them to look.
So another popular finance option is owner financing. And that's when the owner of a property acts as a bank. So the person that was purchasing the property from the homeowner will be paying the homeowner back and agreeing to terms with that owner. So what it does is it's really taking out the middleman. It's taking out the bank, and you're dealing strictly with the owner of the property.
Right, and this could be for a certain period of time, or it could be for the duration of the loan. Owner financing might be a desirable option if you do not qualify for other traditional routes to financing. So if you don't qualify for FHA or conventional loans, say your credit is really jacked up.
Really, Sharon? Wow. Jacked up?
A reason for this might be due to a low credit score. So if you find someone that's willing to offer owner financing, you could pay them directly for a period of time until you are able to improve that credit score and qualify for more traditional means of financing. Also, I've heard of people using owner financing to acquire rentals, and then there are a variety of things that you can do with an owner who is willing to provide financing. I know that we did a podcast with the owners of Trailer Cash Academy. They were sharing in the podcast about how they offer owner financing for mobile homes and how that has been incredibly profitable for them. So there are many things that you can do with owner financing.
So we know that there are more ways, more creative ways to finance a home, but these are 5 that we chose today. What we want to do now is have you comment in the comment box below if you can think of any other ways, or maybe if you have any questions on some of the different financing strategies we laid out for you, all right? So be sure to like this video and subscribe to us here on YouTube. So for Marcus Murray, this is my lovely wife,
Shira Murray,
and we are Black,
Married and Debt Free.
Yeah.